Well, hello there, everybody. It's Kate taking a look at the market on Friday, starting with a chart for the Dow Jones Industrial Average. And, I've never been the biggest fan of the Dow. It's only 30 stocks. It's the one the media obsesses about. On the plus side, though, they are big, well-capitalized companies that are important and can give you an indicator of the U.S. economy. And just because all these companies do business around the globe, they can tell you something about the global economy as well, which of course is all tied together these days due to the COVID situation, due to inflation trends, so on and so forth. So if we take a look at the Dow, you do see that it's up today for the second day in a row. Let's pop over to a 5-minute chart. Nice little gap up there at the open, trending nicely, quietly higher throughout the session. So that is good to see. Let's go over to the S&P 500, the index of the 500 biggest U.S. stocks. In my opinion, this tells you even more about the broader economy than the Dow, but unfortunately, you have the heaviest weighted stocks in the S&P 500 by market cap. They do have an outsized effect on what happens here. Nonetheless, let's take a look. This is the daily chart. You saw the gap up right there on the 5-minute chart a second ago. You can see it right here very nicely on the daily. I'll go back to the 5-minute because I was kind of talking about the S&P before. See that? Nice gap up at the open. Same thing you saw on the Dow. Nice trend higher. Let's go over to the other big U.S. index that is important, which is the Nasdaq Composite. Oh, hey, look at that. Are you seeing a trend here today? Nice gap up at the open, steadily trend higher. Let's look at the Nasdaq on a daily. Now, on a weekly chart, all of these are going to be down for the week. There's the Nasdaq Composite. Thus far, we've got about an hour and a half left in Friday's session as I'm recording this, and absent any big end of day Friday gain, unlikely to happen, but it does look like we're on track for weekly losses. There's the S&P, and here's the Dow again. Now, one of the things I'm always a proponent of is looking at some other indexes, not these big three U.S. equity indexes. So let's take a look at, this is an ETF, ticker is EFA. It's the MSCI EAFE, and what this does is it tracks the index of European, African, Middle Eastern, Asian stocks. In other words, stocks headquartered around the globe outside of the US and Canada. Okay? This bounced off its 10-week moving average right here, still down for the week. But really, let's do a quick comparison now with the S&P 500. Actually, let's just do apples to apples. Let's do the S&P 500 SPY ETF. Okay? So you see that that one did pull back, bounced off the 10-week line. Then you have the EFA, same thing, pulled back, bounced off the 10-week line. So far for the week, the EFA is down 1.16%. The S&P 500 ETF for the week down 1.22%. So they're pretty equal in terms of what you're seeing here. And I do just like to show you a little bit of global performance. That is important, especially if you have an asset allocated, globally balanced portfolio, which you really should have in your qualified accounts, or if you're saving for some long-term goal like retirement. So don't worry, I am going to go back and I am going to look at some individual stocks because I know that's what everybody wants to see, and frankly, it's fun to look at. Okay, go back to the Dow Jones while I talk a minute here about some of the trends, and I'm going to look at a daily chart while I do that. So obviously, we've heard a lot about inflation. That's a big concern. The S&P 500 companies reporting earnings are tending to mention that, so it tells you it's on their radar, and they're preparing investors and analysts that that's going to be a thing looking forward. Now, that trend is kind of battling with continued optimism about post-pandemic reopenings. I'm hearing that term post-pandemic lately. I don't know. Is that overly optimistic? I feel like we're getting there, feel like we're getting to the end, but it's going to be in fits and starts. We're going to have battles over masks this summer. You just know this is coming. But in any event, the trend toward continued optimism about reopenings is real. We've got a growing number of states moving toward full reopenings. Many already have. And, speaking of masks, I think there was some psychological encouragement from the CDC's announcement Thursday that vaccinated people do not have to wear masks indoors. So, that could be affecting the market optimism today, just as part of the wider theme. Let me take a look at one more ETF here for you, and then we'll take a look at some stocks. So this is called the AGG. It corresponds to the biggest U.S. bond index, and there you see where this one is for the day. It's up slightly. Now, bonds are never going to have the same big movements as stocks. They're not as glamorous. They're never going to move the same way. And also, they've been correcting. It's just been ever since back here, August of last year, just has not been a good time for bond investors, have not contributed to portfolio returns in the way you'd like to see. So keeping an eye on that, but it is just something to be aware of how the bond market is performing. I'll say more about that at another time. So let's take a look at big stock. We all know the Walt Disney Company. And this is having a bad day. Now, what happened here? Gapped lower. Now, that's interesting. It gapped lower. Let's go over to the 5-minute chart. I can see what's happening here. It's inching up throughout the day. And you can see if we pop back over to a daily, you see that? It's right at the top of its trading range for the day. Has not closed that gap. It will eventually. Probably not going to happen today. So what was going on here? It had slower growth in the Disney Plus streaming service than Wall Street and probably the company may have expected earlier in the quarter. Again, is this a reopening play? I don't know. Is it just a summer play? Are people saying, hey, we can get outdoors now? Maybe people feel more comfortable getting outdoors. The CDC said no masks outdoors a few days ago, and that was a big theme last summer in any event. There's a lot of things going on here, but it could be some kind of post-pandemic slowing play. Also, these things often determined by the slate of programming that they are releasing. And of course, the theme parks, Disney theme parks, are continuing to suffer for the fourth quarter in a row. We know why that is. Here's the earnings that were reported today. You see sales growth continues to slow. You did have earnings of 79 cents per share, so that was a good sign, up from earnings of 60 cents a share a year ago, and you had all these earnings slowdowns. Very interesting. Started to happen before the pandemic, didn't it? That's interesting. Okay, so you had some encouraging news, some discouraging news. Let's take a look at Coinbase, because we just cannot hear enough about crypto, can we? So this company went public super recently, just right back here on April 14th. Now, what you're seeing here is very normal, that new IPOs have a big pop and then they tend to consolidate. Of course, this is the platform. I actually have it on my own phone that allows people to invest in crypto. And, we've had Bitcoin, Ethereum. They did bounce back from some losses earlier in the week. Pretty bad week because Elon Musk keeps talking about crypto. And that's, of course, going to affect the revenue and the business here at Coinbase. Let's go over to the weekly chart, and you can see what's expected for the whole year of 2021, earnings of 7.17 per share. That would be a 337% increase over last year. So, remains to be seen. This one is just a new stock that's getting a lot of attention because of its business. There's a lot of new stocks that are not getting anywhere near this attention because they're not involved in crypto. And I'm moving on to AirBnB to show you this because, frankly, I find it a little more interesting right now. This also, recent IPO, went public a few months ago, back in December of 2020. And, this was obviously after that whole big debacle that happened last March, so you're not seeing any of that reflected in this stock. But, what's going on with the vacation travel? Well, let's go over here to the weekly chart. Company did post a loss, as expected. Another loss expected next year and in 2022. And shares are lower well, they did start out. Let me go over, this is interesting. Let me go over to a 5-minute chart. You did see kind of a gap up, trading down, and then kind of found a little bit of equilibrium over here as the session went on. So, we just got to see how the travel business plays out. I think any reasonable person can say, sure, it's going to be coming back this summer with a vengeance. But then Airbnb is also battling a lot more regulation, a lot more localities, both in the U.S. and internationally, looking at higher fees, higher taxation, just regulating the access to Airbnb properties even more. Not going away, but there may be some more constraints on the business. All right, let me go back to the S&P 500, and I think I mentioned this the other day. I've got a different neighbor getting not a roof on their house today, but new siding. So there's a lot of hammering going on out there as I'm doing this. Okay, you had April retail sales were disappointing, came in this morning, although that was in comparison to March, that was better than expected, so that could be a factor. And, you see stocks up anyway for the day, so they apparently are shrugging that off. And you've got fewer workers leaving the job market. So that's a positive thing. That helps mitigate the familiar theme we've been hearing for the last couple of weeks of labor supply shortages. So what do you do with all this right now when you see what's happening in the broader market? The uptrend has come under pressure lately. Go back here to a weekly. You see the S&P is kind of flattening out. It's not terrible. This week's action did put it under more pressure than previously. So there's still a lot of mixed signals when it comes to the economic data out there, with potential to send the market in either direction right now, quite frankly. Now, if you have a strategically allocated portfolio of funds with things like the non-US stocks in the EAFE or the bonds over here in the AGG, you really do need that in your qualified accounts. I'm not talking about your trading accounts. You really need something like that in your qualified account. Then take a look. Is it time to rebalance? Are your allocations correct? Are your risk metrics correct? Good time to take a look at that. And if you have single stocks, don't try to buy as they're falling lower. Let's go back and take a look at Coinbase over here. Back over to the daily. Is today really the day to buy Coinbase? No. I would argue that the day to buy Coinbase is not coming anytime soon, because you really want to see a much more powerful upside trend. All right, that's a look at what's going on in the market with some key stocks today. Thanks so much for joining me, and I will see you soon.